Hello, welcome back to Payroll Question Time. You've had a summer off. We've got loads to get through. And of course, National Payroll Week celebrations coming to a close soon. But we've seen some amazing teams across the UK celebrating and beyond. And we'll get to that in a little bit more detail a bit later. I'm going to hold on just another 30 seconds to a minute, just make sure everybody is on the webinar. I can see quite a few attendees have already joined, just to give everyone the maximum opportunity to join before we get started. But I hope you've all had lots and lots of fun this week celebrating National Payroll Week. I know I did. It started with a brilliant event actually hosted by the CIPP for me. My first day back after a month of annual leave. I had the lovely opportunity to meet with Simon Parsons face to face for the first time in over 2 years since all this pandemic malarkey started. So that was very nice, as well as many others who I'm sure are joining us on this webinar today. So for those of you that managed to join the CIPP event in London, it was a great success. I think there was about 100 people from the profession all coming together face to face. It was wonderful, and it was a really good way to start things off. Listen, before we get into some of those celebration things in more detail, remember today we want all of you tuning in to help shape our conversations. So if you have any questions at all, drop them into the questions chat box. We will do our best to try and answer those as we go. Any we don't get through to, we will obviously try and answer later on in a follow-up email as well. Just put them in the chat box and we'll do our best to answer them. And of course, there will also be a document transcript which will be shared with you all as well, along with these slides. So if you can't join us for the whole webinar, don't worry. We will obviously follow up with a recording at a later date. And before I introduce you all to our fantastic panel, I also have to go through a few areas of housekeeping. So number one, we have some polls today. I believe there are going to be 4 polls. That means we want your involvement. We want you all to get involved in those polls. Put your votes down because they will help shape the conversation, not shave it, but shape it. We are, of course, recording this. So we will be sending you the slides at the end of the session. And there will be a survey at the end as well. Please do take the opportunity to let us know what you'd like us to discuss in future episodes of Question Time. And last but not least, I'm just going to read you all our legal disclaimer, which you can see hopefully in front of you on the screen, which just says the presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are uncertain. It is not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. Now, for those that don't know me, my name is Nick Day. I'm host of the Payroll Podcast. I'm also founder of JGA Payroll Recruitment, and I'm a Reward 300 member. That's probably enough and all you need to know about me because of the panel of the experts of the show. So let me introduce them in turn. I'm going to go from, as I see my screen, left to right. So over to you, Simon Parsons.
Good afternoon, everyone, and welcome. I'm Simon Parsons, Director of UK Compliance Strategist at Sdworks, and for my sins, and I guess it was good to meet up with the payroll industry on Monday that were down in London, as my first time in London since the Global Payroll Association conference in 2020. But I chair the BCS Payroll Specialist Group and an organisation called IRENE, which is the Electronic Exchange with Government User Network, and sit on a number of government panels, and I'm also part of Reward 300.
Fantastic. Well, although the picture may say John next, I'm going to go to Lou because she's left to right on my screen. So Lou, introduce yourself if you can.
Hi, my name's Lou Gray. I'm based in Belfast and I am Head of Transitions and Operations of a managed bureau service of payrolls. I have over 30 years experience in payroll, and I also have individual chartered status with CIPP, as well as being a board member, and I too am part of Reward 300.
There you go. We've got some real gurus on this panel. I love it. But over to John Keeble.
Thanks, Nick, and good afternoon, everyone. Even I'm John Keeble. I'm an employment partner at DWF, and now I think I have the status of probably being a PQT veteran. I've done enough of them for that accolade. So delighted to be here. Although I have to say, I think I'm applying for a job with Nick if he gets a month's holiday in one go. Sounds fantastic. So
yeah, we'd love to have you, John.
Application form in shortly, Nick.
We'll chat at the end of the show for sure. And last but of course, no means least, our other resident expert and someone else who's obviously joined many of these before, Samantha Mann.
Oh, hello. Hi, everybody. Last but not least, well, who am I? Yes, I am Samantha Mann. Like Lou, I've been with the payroll industry for a number of years now, far too many to count. I've stopped counting, they're that many. And it is my privilege to be the payroll training consultant at Armstrong Watson LLP, which is a firm of accountants that are based and serve family businesses across the north of the UK. And on the subject, I guess, of accolades and awards, we've been nominated in 3 categories, I believe, for the CIPP annual awards this year. So yes, so there's my claim to fame. But it's my privilege to support the team, the payroll team, both new and long serving members of the team, with legislative training.
Fantastic. So let's talk about today's discussions, which of course are shaped very much by you guys, because at the end of this, you do get a survey and you ask us what you'd like us to talk about. So today we're going to talk about National Payroll Week. We're going to find out what's changed over the summer, the end of COVID-19 special measures, planning for 2022-23, pay gap reporting, misconceptions of holiday pay, which I think is going to be a really interesting discussion subject. We've been talking about it off air already, so do stay for that. And of course, hot topics, of which, if we have time, there are a few to get through. But before we jump into the nitty gritty of National Payroll Week, I want to get all of you involved. It's been a really inclusive week of everyone getting involved in different things. So it's now your turn. Let's start with the poll. How have you celebrated National Payroll Week? So I'm going to get that poll on the screen. There are going to be a few options for you. Maybe an internal event to raise awareness of payroll complexity. Perhaps you've had balloons and sweets to encourage visitors to the payroll team, a team quiz all about payroll, a presentation on the subject of pay over the ages, or nothing. In fact, what on earth is National Payroll Week? Whatever it is, put your answer in there and we'll comment on those in just a moment. Certainly from my perspective, I've seen loads go on. As I said, it started with that fantastic event by the CIPP, but we had a little competition ourselves as well. Here at JGA, we ran a little competition, which was, we asked everyone on LinkedIn, every payroll professional, if payroll was an animal, what would it be and why? We had over 217 entries. We narrowed it down to 4. We had chameleon, because payroll people adapt very well. We had a dolphin, because you have to learn quickly. We had an ant, because you're very much team workers. And we had an octopus, because you're flexible, you need many arms. And I have to say, it was a close vote between chameleon and octopus, but octopus ran through, which was a great little competition. I think it was Fiona that won, and it was a really, really fun and exciting thing. But if you'd missed that competition, there were lots of things like that going on during the week. Loads of cakes being made. I saw some fantastic cakes. I think she made about 50, which was Sophie Eastwood, payroll advisor at THG, which she baked the cake. She wrote National Payroll Week on the letters, which was fantastic. I saw growth partners, balloons, games, bunting, and it's been very much the same across the board. But I think the one that won it for me, for those that saw it on LinkedIn, was Sarah Chasney, Director of Payroll at Pacific Bell. And she went to town on the baking, went to town on the cakes. The display, if you haven't seen it, go and have a look on LinkedIn, was absolutely fantastic. That's actually the company you want to work for, John Keeble, not us, because you get those kind of cakes on a daily basis. You're happy days. And they're obviously good for the waistline. They looked delightful. Anyway, I don't know how this poll is going. The results are in yet. If they are, I'd love to get some commentary on those. While we are waiting for that, though, of course, you may have also seen during the course of this week a certain hashtag trending on LinkedIn, which is payroll is an industry. If you want to find out more about that, I would recommend going to LinkedIn, just write in hashtag payroll is an industry in the search bar, and you'll find out more about it. But there is a real momentum this week of people trying to get payroll recognized as an industry on LinkedIn. I think it should be. There are thousands of us involved in this industry. So if you want to be part of that movement, please have a look at that hashtag and get involved if you can as well. Well, let's have a look at these poll results. Lou, what are your thoughts on the results here? Maybe you can tell us a bit about how you got involved in National Payroll Week this week.
I think basically I was on social media this week promoting National Payroll Week and raising the profile of payroll. I think that's such an important thing. Looking at the results, nothing, what is National Payroll Week? I think that says a lot, that we have to understand as an industry that not everybody is on social media, and therefore will not see what's going on LinkedIn, on Twitter, and on Instagram. And I think we'll have to make the assumption that very much is the case. You know, if you look at some of the CIPP statistics, maybe 60–70% are not on LinkedIn, so therefore they don't see it. So it's about sharing that in another way. The fact that 10% had an internal event to raise awareness of payroll complexity, I think shows that that's obviously the beginning of something great, of how we can progress and make payroll an industry, and also to allow people to understand what an important career choice it can be. You know, throughout National Payroll Week, the CIPP has had a number of free webinars that you've been invited to. If you were to reach out to my team to find out, well, what did Lou Gray do for them? Well, if I'm being honest with you, this week Lou Gray took a week's holiday to allow her to concentrate on social media. But at the same time, I was able to get the team just involved in half-hour webinars to learn more about statutory maternity pay and going back to basics, the manual calculation.
Fantastic, fantastic. Was there anyone else on the panel involved in National Payroll Week at all? Did you have any events going on yourself, either yourself, Simon, or Samantha, or even yourself, John?
No, I don't think we had any events that I was aware of that were going on. But having said that, I haven't been a frequent visitor to the office. So.
I think that's probably had a pull on it as well. The office has certainly changed. We're going to talk about that certainly during the course of this webinar, about how that's changing and how people are returning to the office. But about yourself, Samantha or Simon, were you involved in National Payroll Week?
Well, certainly the team up, because our head office is based in Carlisle. We've also got colleagues up in Glasgow, and so the team will have been celebrating National Payroll Week on a daily basis. And I've noticed certainly on the internal internet, interweb, whatever it is you call it, whatever the terminology is, there's been a marked increase in terms of payroll subjects covered throughout the week. You know, which all lend themselves to raising awareness of the importance of payroll. But I think that 85% finding is an important one, and I know Lou's already touched on this. But there is no one size fits all with payroll. There will be many people who will deliver payroll for their organisation along with an awful lot of other jobs. And so whether they're on LinkedIn or any other form of social media or not, they won't necessarily be aware of payroll as a wider profession, because it's just a small part of what they do. And I think that all adds to the richness of our industry and sector.
Couldn't agree more. But I think what's interesting as well is not just the statistic that not everyone's aware of it yet. I don't think that's necessarily a bad thing. We're trying to raise awareness, but actually there's a huge amount of support out there. But a lot of payroll people might just say, we're just too busy. I haven't got time to go onto social media, right? Well, I'm stretched. I'm like octopus. I've got loads of things going on. I haven't had time to have a look. But the support network out there, if you want to access it, is phenomenal, and it's such a supportive community. It's such a supportive industry. So hopefully next year we'll see that percentage come down a little bit. But for those that were involved, great to see that you were able to do quizzes and events and presentations, which is fantastic. Well, let's get into the nitty.
Sorry, Nick, could I just say, just to let everybody know, National Payroll Week was established in the UK by the CIPP, and it started back in 1998, and it was to celebrate the payroll profession. Just to give you an overview, I should have maybe just made that clear. That is, I mean, it's been going from 1998 by the professional body to encourage its members and anybody who has part of a payroll job to be involved and to realise it is an important career and a job that you do every day of the week. Thanks, Nick.
I was going to say, it's been obviously recognised by the government as well this week, Nick, because so many announcements have come out.
Indeed. Well, we'll get to those. Let's get into the nitty gritty then. Before we get into the latest announcements, let's see what's changed over the summer. I'm actually going to start with a random, and I'll be honest, I don't know if this did change over the summer. We've had our first question in already, so thank you for those watching this. Please keep the questions coming. Comes in for Jackie Thompson. It said there's a random question on new starter checklists. So does the panel agree it is more confusing than ever on the student loan questions? Do you think HMRC will change the form again in April? So I'll start with that question, then we'll jump into some of these subject marks. Simon, you're laughing. I'll come to you for that.
Well, I am. Well, many years ago, I turned up for a meeting in 100 Parliament Street, and they explained to us that it was really complicated and very expensive to change this new starter checklist. And so I actually knocked one up in the corner of a room on my PC and posted it to them via email. And said, you don't need to now, do you? Here's one. That was, it did actually change at that point. No, the double questions on the student loan on the starter checklist are because it's a double negative question. So in effect, you're asked to say something doesn't apply and then not answer, and how do you complete? I don't think there is an intention that the government will change it. To be honest, I think HMRC are happy with their design as it is, but I agree it is very confusing. But it is better. I would argue it is better than the one we had before.
It is better.
Fantastic.
I mean, what I would like to add there is what still remains confusing with the starter checklist is, whilst there are certain elements of gov.uk guidance make clear that it isn't the P46, which would, the tax code side of it, those declarations relating to the tax code, formally referred to the P were referred to it the P46. And so there are elements of guidance that makes clear that this is not the P46. What is not always clear in the guidance across gov.uk is how important the starter checklist is, regardless as to whether or not you have a P45. And I think that sometimes that message can be extremely confusing. The guidance is still almost written as if, well, if you haven't got a P45, use a starter checklist. But actually, just touching on the student loan issue, there's quite a number of reasons why you would need both in all instances. I think that would be my issue with the starter checklist. And I would agree with Simon, whilst it's not perfect, it's getting better. We can only hope that it will be perfect by the time the P45 is abolished.
Well, I was going to say, I actually did send them through a design which had one question in relation to student loans, which was satisfied it, but they decided to split it into two. That's sort of fella. Quite often you'll be told that they need to have some special designers in. I will just knock these things up in the corner on a PC and send them to them. So they did take on board a number of it. But the reality here on the starter checklist, and the point that Sam's made, is lots of employers think you don't have to do anything, and so place their employees on 0T1. They should not be doing that. You need to get the starter checklist. It's actually treated by HMRC as an error situation in their statistical returns. They believe the employer is not fulfilling their duties.
Great. Well, good point to finish on there. So let's talk about what's happened over the summer. We're going to start with national minimum wage. There have been some absurd excuses for not paying it as well. I know Samantha's got some great examples of that. So I'm going to pass this over to you, Samantha, to tell us a little bit about some of those.
I don't know. There's been so many things that have happened over the summer, but I'm sure I am not alone in being open-mouthed at some of the reasons listed, absurd reasons listed for not paying national minimum wage. Because we always think about the people being named and shamed for technical errors, but she does not deserve the national minimum wage because she only makes teas and sweeps the floor. I mean, how shocking is that? How can anyone even admit to that? I thought it was okay to pay young workers below the national minimum wage, as they're not British and therefore do not have the right to be paid it. How many, John will know this, how many laws are you actually admitting to breaking by saying that? My workers are often just on standby. Now, this is a common error when there are no customers in the shop, but I only pay them for when they're actually serving someone. I mean, this touches on like sort of common errors, but my goodness, that's just shocking. And my employees still learning they're not entitled to the national minimum wage. That's my culture. You don't pay young workers for the first 3 months until they've proved themselves. Wrong, wow. wrong. Wow. And there are more. And and I think actually publishing this list is a helpful reminder that it isn't always technical errors. There are sometimes, many times, intentional decisions made not to pay the national minimum wage and national living wage, which is why we continually talk about it.
And
of course,
HMRC, sorry. And
HMRC, you can of course see the published list of some big names in there. There's some big names in the published list. Let's go to Lou for HMRC. Go on.
Sorry. They did run a campaign over the summer about check your pay slip. So that was being rolled out to everybody to get them, to encourage them to check their pay slip, to make sure that they were getting paid the national minimum wage. And I think it's so important that everybody is educated in that as well. Sorry, Nick.
No, it's okay. There's a slight delay there. We're catching over. So let's talk about then why people are failing a national minimum wage, because it's not just about the rate of pay, it's about the rate received. So Simon, tell us why people are failing. What's this misconception or this misunderstanding?
Well, you're quite right, and it's probably a phrase I come out with. It's not about the pay rate, it's about the rate received, as you said, Nick. And that's because there are lots of rules around it. Also, sometimes it's seen as perceived as a payroll problem, and that payroll should solve this. And those who've been through an HMRC inspection will understand, an audit will understand it's not about payroll necessarily, because they'll go and interview people on the floor to find out what happens. So there's element as a business, you may think you want to be compliant with national minimum wage, that's all what we want to do, yet you'll set expense targets for a branch, and the branch manager's thinking, how do I get my expenses down, but I've still got the work to be done. I'll get everyone to come in half an hour early and we won't pay them. And it's sort of, you've just committed a criminal act for your entire organization by doing that. And so there's an element of thinking about top and tail time. Some people operate schemes where if you're 5 minutes late, we'll pay you 15 minutes later. You can't, or you'll need to stay behind until we can lock up, but we're only paying you to past, even though it takes 20 more minutes before we can get out. There's all sorts of things. Uniform is another, so you must wear a black top and black shoes. HMRC will treat that as a business expense, which reduces national minimum wage. Or the inadvertent types of areas that have tended to come up is, well, we're offering a discount for purchasing our own goods from our own staff. Any deduction from pay, which is a payment to the employer, reduces national minimum wage pay. Another misconception is overtime, and that is the overtime premium doesn't count. And also leave, statutory maternity pay, sickness, holiday don't really count for national minimum wage purposes. So that's where it gets into the really confusing area of where most people start to fail, and that's on the application of salary sacrifice arrangements, taking pay cuts for pensions. And you think, well, this is all for the benefit of the employee, but unfortunately the regulations don't support that. And so we actually end up committing a criminal activity. Am I all right saying it's a criminal activity, John? Because I think it is a criminal activity. It's not a civil law breach.
Yes, that's right. I've got the same sort of experience as you, Simon, in terms of the common issues that we get, and uniforms is a big one, particularly dress codes. And but what employers sometimes don't realise is that there's no limit within the national minimum wage regulations, which if anyone's looking for something to confuse them by reading through, then read the regulations. It's best approached with a wet towel on your head and a gin and tonic in your hand. But what it means is, if, for example, you've got a dress code that someone has to wear black trousers, there's nothing to prevent them going and buying some from Emporio Armani at £110 and claiming them back. So if you have got a dress code, then you may want to direct them to a particular store to buy some particular clothes. So uniforms are a big issue. Again, same as you, Simon. It's those issues around shift handovers, where people stay behind for an extra 10 minutes because they have to hand over to the next person on the shift. And searching, of course, has been a big issue when people clock off and they're searched when leaving a particular site. We've seen some which are, unusual and unintentional. So, for example, when the clocks change, and people sometimes work an extra hour on shift. When the clocks change, they're not paid for that hour. So we've seen that. But one of the issues where we see a lot of potential failures in respect of salaried hours. Because if people are working salaried hours, then HMRC's view is that the overall hours need to be ascertained from the contract. But of course, if you have weekly hours, say 42 hours per week, HMRC sometimes, we've seen, take the view that the basic hours can't be ascertained because there are more than 52 weeks in any given year. So it's an area where angels fear to tread in certain respects with national minimum wage. And you're right, Sam, there are people who deliberately don't pay national minimum wage. But in my experience, most of the breaches are inadvertent. And for most of the time, people just don't realise that they are in breach of national minimum wage.
Actually,
Well,
can I just add there, Nick, that I think next year's campaign to check your payslip, amongst other things, will have, well, I followed John Keeble's advice. I was reading the regulations whilst drinking gin.
Yes, well, I was surprised that you cut and paste my advice for the absurd excuses, actually, Sam.
Well, hopefully we haven't lost too many attendees while they can listen. Of course, you can go into listen-only mode if you're currently shopping on Emporio Armani for some new trousers at the same time. No one will ever know. While we'll do that, there have, of course, been a new health and social care levy as well. The government this week announced the introduction of the new levy to help pay for the NHS and social care reforms. We're going to jump here to our second poll. If you haven't heard about this, or if you're not aware of it, then this poll will hopefully help you, as will the discussion. So we're going to go to a poll, and on this poll, we're going to say, do you feel annoyed it's yet another layer of complexity? Perhaps you feel pleased it's long overdue, or maybe you are concerned about the HMRC readiness by 2023-24, or other. By all means, add the details to the chat box. We'll do our best to answer those as we go. As we wait for those poll results to come in, and before we get into this full discussion, we've had a couple of questions in as well. So I'll wait for those poll results. I'm going to jump to you, Simon, if I can, for this quick question that's come in, which says, what about private fuel deductions for company car drivers? We deduct for the private mileage for the cost of fuel on the fuel card, so it doesn't need to be a P11D item.
Yeah, I think it's an element of considering what that means. So would that be treated as a deduction for the benefit of the employer? I think you're deducting that from a benefit item amount, so it has a reduction. It's an interesting point. I might have to think about it, and maybe that's one of the types of things we'll come back to in the question and answers we publish after. There's an element of what's the payment for and who's it going to. Yeah, any thoughts there, Sam? Actually, I'll see what you thought.
Well, I'm like you, Simon. I would need to go back and double check to make sure my understanding would be right. One thing that it highlights, I think, is the difference of treatment depending on whether or not we're looking at something from an income tax reporting for benefits in kind and benefits code, or pay as you earn basis, as opposed to for national minimum wage purposes. And quite often there's a diversion between what guidance will say for the benefits code and treatment of a payment, almost suggesting that it's perfectly acceptable to have that payment, but it's actually that guidance is only talking about how you would treat that amount for tax purposes or NIC purposes. And then, of course, you've got the guidance that talks to national minimum wage. And I must confess, I've never seen that used as an example of something that would reduce national minimum wage amount. But that's not to say, I would need to double check that, and we can put that in the answers that go out, if that's okay, Nick.
For sure. We do like the questions that baffle the panel, so do keep them coming.
It
gives us, keep them on their toes. I think it's incredibly important that we do that. I don't know if the poll results have come in yet, but while we're waiting for those, Simon, I think we're going to add a point to the end of that, will you?
Well, yeah, I mean, my gut instinct is it does reduce the pay for national minimum wage purposes. But that's a gut instinct. But the only thing is, because companies operate in two different ways, sometimes for private fuel card, they'll have what they call a contribution amount, which is just fixed. So it doesn't actually get rid of the P11D value at all, but they're just allowing contribution for private. But it does reduce quite often the benefit value of the vehicle that's used for private use. So there's ways of playing the values to have effects on taxation, but it is a payment to the employer. So on that basis, my gut instinct is it probably does reduce it, but we'll look at it a little bit more. It's an interesting one.
We've got the poll results, and it comes to you with these, Lou. It's quite interesting. We've got a third still saying it's long overdue, and 2/3 or a half rather saying another layer of complexity. What are your thoughts on those poll results?
I think whenever you look at it, it obviously does add more to the job whenever you're manually calculating it. We're very much going to be reliant on our software to be able to calculate the additional payment. I mean, I would be I would be along with the 30% concerned about HMRC readiness for the 2023/24 tax year and the implications that it's going to have for that whenever it's going to be separated and shown as a separate amount. But yes, I mean, again, it is about payrollers being ready and being prepared for the government and how they are going to recoup the money that they've had to spend out during the pandemic. So it is understandable, and it has been spectacularly announced this week in National Payroll Week, of course.
Yeah, absolutely.
Yes.
So Simon, can you tell us a little bit more about this, the social care funding, how that's going to really impact? Is going to come from national insurance contributions, going to come from dividends? What should we be aware of going forward?
Yeah, sure. Well, initial thing is if you look at your NI bill as an employer, you're in effect going to pay 9.06% more or 9.058, depending on how you round it, but roughly just under 9.1% more in employer national insurance than you did before. Equally, you've got those increases that are affecting your employees as well if they earn sufficient. However, it has been confirmed that the employment allowance can be offset against it initially. Whether that will be the case in 2023 is something to look at. And also questions have been fired off. There was a meeting yesterday and fired off some questions in relation to it. Initially, we know it's a rise to 13.25% employee, 15.05% employer contributions from April 22. They then revert back to 12% and 13.8 with a new levy separate coming in. Also, there's this requirement that they're hinting that they want employers to actually put a message on the pay statements, pay slips, pay notices, online, whatever, to actually say, oh, and by the way, you've contributed to the health and social care levy. We don't know what that message exactly is yet, but they're asking employers to do that. So there are some implications. And then for 23, there's an element of, well, how's that going to work? For example, in the case of attachment of earnings orders, the attachable earnings is reduced firstly by tax and national insurance, but there is nothing necessarily in the law that will have it being reduced by a health and social care levy. So for 22-23, you think, yes, it's all included because national insurance is knocked off, but in 23-24, it's not national insurance anymore. Plus, it's been stated this is for Class 1, Class 1A, Class 1B, and Class 4, which is to do with self-employed. So that's okay for this coming year if it's just 15.05%. How does that operate when it reverts back to 13.8? So does the PSA, does the P11D going to have a 1.25% liability applied to benefit results? And I guess we just don't know at the moment.
And Samantha, there's been loads of conversation about the impact of the national insurance contributions increase within the payroll community. We've seen loads of questions sort of going back and forth. What are the biggest concerns that you've seen in terms of the questions that are coming through, and what should we be mindful of?
Well, depending on where you sit within the payroll industry, if you're serving clients, then your phones and email inboxes will have been ringing hot with questions about how this is going to impact the costs for those employers going forward. So clients will be demanding to know how this is going to affect them and seeking reassurance that the payroll service is going to be ready and fit for purpose to deliver that. In the meantime, the payroll professionals working within payroll services are waiting to receive that confirmation from software developers. And as Simon's just demonstrated, meetings are being held, questions are being asked, but that doesn't mean to say that the questions are being answered with any sort of accuracy. From another perspective, I guess this is, I confess I was quite pleased. Well, wrong to say I was quite pleased to see it published, but one of the joys of going back to training work with colleagues is when we're doing the refresher training on national insurance contributions and the pay-as-you-earn system. I've kind of emphasized so much over this last year how the Social Security and national insurance contributions specifically are used by government to drive behaviour from employers, but also to fulfil their policies. And that's happened over a number of years. And this is a really good example to all of my colleagues who are new to payroll of yet another situation. And of course, let's not forget that in addition to this, and we will be talking about veterans and free ports as well, we are going to be seeing an opportunity for employers to make savings on their secondary NICs by employing veterans, by having employees work over 60% of their time within free port areas, of which there will be 11 around the UK. And of course, not forgetting the younger employees under 21 or apprentices under 25, there's an opportunity there for employers to be making savings already on their secondary NICs. So we might start to see a move by employers to kind of thinking about, actually, could we make better use of young people within our workforce? Could we support apprenticeships within our business, because if to do so is going to save us money. I'm intrigued about this payroll, this message on the pay slip. I won't lie to you. I'd like to think that if it is going to be a requirement from government, that software developers will be able to build that in to their products to take away the burden of, particularly when you payroll service with thousands of clients, actually having to add that message into your pay slips on a per employer basis. So there's saving, there's concerns there. I mean, I'll be honest, if we were able to answer these polls, I would sit in those top 3 boxes. And I'm intrigued actually to know whether or not anybody's added anything in the chat box for that 4% in terms of how people feel about that.
Nothing on the 4%, but there has been a question asked, and I'm loving these. They're coming through thick and fast. So let's answer all here. I'll come to you, Lou, for this one, if I may. They've asked, it's Jacqueline O'Gara has asked, can you give us more information on how we would go about setting up a salary sacrifice scheme for season ticket loans, purchasing an electric car? We currently operate a season ticket loan, but it's just a net deduction. The electric car would be a new thing. Any advice would be useful.
I'm going to have to ask Simon to help me with this one, because we talked about the electric cars in our last payroll question time, and it is not I haven't had any experience of it to date, so anything I would give you would be purely out of a book. Simon, would you be able to offer any guidance or headlines to consider?
Yeah, sure. I'm happy to come in there. Steph, are you all right taking us back to the slide again? Is that all right? There we go. Thanks. So, hi everyone. I can see you again now. So, salary sacrifice for season tickets is there are certain things that have elements of exemption, but I'm going to caveat it. There's articles out today with Rishi Sunak saying that he may well stamp on salary sacrifice arrangements at some point or other, because of course he's fearing that they'll become extremely popular now that employer costs have gone up by 9.1%. So for electric cars or cars under 75 grams, don't fall under the OPRA rules. OPRA is optional remuneration arrangements, and it was a measure brought in back in 2017. I'm saying that from memory, April 2017, to curtail the use of salary sacrifice. So salary sacrifice has in effect been limited now to childcare, cycling to work schemes, pensions, and there's probably something else, and I can't remember what it was. But one of the things is pensions, plus there's an element of company cars used to be a popular salary sacrifice scheme tool, especially in local government even. But it's been limited that they don't work. If you salary sacrifice, the amount sacrificed becomes taxable and subject to Class 1A, so the employer saves nothing if within certain times. And there was what they called a grandfathering period. That grandfathering period has ended, so none of the prior arrangements continue, but it still works for electric cars, those that produce under 75 grams. So yeah, you don't have to get permission necessarily. You can, or you used to be able to get clearance from a section of HMRC that the salary sacrifice scheme was effective, but in effect you have your employee agree to a pay cut and you give them a company car in return. On that basis, your tax and NI liabilities are reduced to the amount of your net pay that you have after the sacrifice. Perfect. Does that help a little bit?
I think that's very well put, Simon. Thank you ever so much for taking the question. And coming back to you, Samantha, you said you're interested in that.
I'll caveat that, Nick, with in the capacity of us here, can't give tax advice. I only can point you in the right direction of information, and you need to seek your own professional advice.
Of course.
Sorry.
So Samantha, you said you're interested in the 4% answers. I did have someone, Andrew Williams, actually put a comment in to say my main concern was, as you highlighted, was the payslip message. So he echoed that what you mentioned there as well.
No, thank you.
We've got lots to get through. It is National Payroll Week, but we've got something else to celebrate, which is the end of COVID-19 special measures. The only other summer news I think I had to mention from that slide was the spending review and autumn budget day has also been announced. The Chancellor of the Exchequer revealed that the autumn budget will be held on the 27th of October 2021. I think we'll leave that for the October PQTV potentially, but news nonetheless. So if we can jump to the slide, Steph, for the end of COVID-19 special measures, I think it's probably time to launch another poll as well. If you're all ready and if you've finished on Emporio Armani's shopping site, we'll get you all involved once again. The question today for this one is, how confident are you with your CJRS compliance? Are you very confident? We have internal audit processes in place. Are you as confident as we can be given our limited resources? Or perhaps you're not confident at all? Don't worry, if you're in that last box, we've got a great panel here. They're going to help you regardless. But as we wait for those to come through, the end of CJRS, some ongoing challenges. I'm going to come to you, John Keeble, actually, if I may, before we get into the legislative side. Just talk about if employers want to reduce salaries because staff are now based at home. That's a question we've had a lot on the payroll chats that I've been involved in. While we're waiting for those poll results to come through, I wondered if you could help me with that question, because a lot of employers seem to think they can reduce salaries if staff are now based at home and they don't want them to return to the office. I wonder if you could help me with that, John, before we jump into the challenges of CJRS ending.
Yeah, well, I think that's going to be potentially problematic because, of course, employees will have a contractual right to a salary that will be set out in their contract of employment or Section 1 terms and conditions. And if they have a contractual right to that salary, it's very difficult to vary that without their consent to that. It is possible, if you want to change terms and conditions, to go through a process if employees don't agree to terminate their employment and re-engage them on new terms. But for obvious reasons, that's seen as something of a nuclear option for employers.
Sure.
And not good for really employee relations. And there's an added issue on that as well, that depending on the numbers, you may have to engage in a collective consultation process. So you'll understand from an employment perspective, employees have lots of rights, and there's nothing which is probably more protected than the level of their pay, Nick.
Excellent, fantastic. Well, it's a question I've seen a lot being asked, so I thought I'd raise it while waiting for those poll results to come back. Have we got the results of this poll? Super. And Lou, what do you think about those results?
I think it's great that people are confident given that they're limited resources. So confidence, I think, is definitely very important. And for those who are very confident because they've got internal audit processes in place, I think that's been the key for the CJRS right from the very start, about making sure that you had all your controls and that you did all your checks. I mean, the claim for August has to be submitted by the 14th of September. And obviously, September claim has to be submitted by the 14th of October. But I think it very much comes down to moving forward, and with the task force, I do believe that businesses will have to refer back to the claims that they've made, refer back to the documents that were in place at the time and their calculations. And as long as you have those all saved away and that you're happy having reviewed them and they're saved down, then I think that's a great place to be. Not confident at all. I think very many of us in payroll, whenever we've been doing the CJRS, can feel not confident at times. When you look at how much information we've had to read, we've had to share, sometimes whenever you go into conversations with others and your network, then you hear conversations and then that maybe heightens your worry and your concerns. And what I would stress is to go back and start, have a look at your claim, look at the information that you have to hand, look at what you've saved in line with the government guidance, and just double check for yourself. And that should give you enough confidence to know that the work that you've done and the information that you've gathered is enough and it is correct.
Fantastic. And of course, numbers on furlough have now fallen to their lowest levels since the start of the pandemic. Steph, we can go back to the slide, end of COVID-19 special measures. That would be fantastic, because right now the UK economy continues to rebound, businesses are reopening, and new statistics are all looking positive on the economy at the minute in terms of businesses coming back to fruition, welcoming people back. But of course, there's going to be some implications here as we end CJRS. So, Simon, what are the ongoing challenges? I wonder if you could highlight those to our listeners.
I'll do my best, Nick, and we'll see. I may need some others to chip in as well. But as Lou's saying, CJRS is coming to an end. Lots of employers will have been sent letters indicating that you need to check your claims. And there's still a lot on social media that we see in discussions where there's a lot of misunderstanding. So just make sure. Steph, are we okay getting back to the PowerPoint? Okay. Itself, we seem to be stuck on a quick poll there, but it's sort of everything's winding down now with CJRS. Let's get back to normality. Sickness was announced as well, so COVID SSP sickness is there, but lots of confusion over pay rises. Does that affect reference pay, usual hours, etc.? Yeah, anyone else want to help me out on this one?
I think there's some news on flexible SSP, wasn't there, Samantha?
Flexible
yes. SSP. Well, yes, of course. As Simon's just mentioned, it's now been announced that the reclaim or the ability for smaller employers, that's employers who have 250 or less employees across all pay-as-you-earn schemes, as at 28th of February 2020. If you can cast your mind at that far. They were able or have been able to reclaim up to 2 weeks SSP so long as the employee was absent from work due to some coronavirus reason, which may include self-isolation. It may include the fact that they have symptoms themselves. It may include the fact that they live with someone who has symptoms. It may include the fact that they've received a shielding letter advising them to shield during that period. So there's a whole number of reasons. It does not include quarantine. So people coming back into the country who are being required or have been required to quarantine. So that's not included in there. There's a whole number of dates to sort of be wary of, which reflects the different dates in which legislation was brought in as government caught up with the different reasons why SSP might be payable. So, as I say, they could reclaim up to 2 weeks. They could for their employees, and that ends as at the 30th of September. So that's for absences for COVID or coronavirus reasons, up to the 30th, up to and including the 30th of September. And employers then have up to 31st of December in order to reclaim those amounts or make any corrections if they discover they've made errors, and then that they need to keep their records because, of course, state aid, de minimis state aid, comes into to this because of the restriction to smaller employers only, i.e. that 250 employees across all pay-as-you-earn schemes. That means that this classes as state aid, and so the employer would need to keep the state aid declaration, which would come about when they make their reclaim, when they reclaim their amounts. They would need to keep that statement for 3 years to 31st of December 2024. But to pick up on what Lou said about the audit process, and that follows the poll that we kept, employers are required to keep their records of their claims for up to 6 years, and this shows how, I mean, the message all along has been that HMRC won't look to punish harshly innocent errors. However, that long period of time for record keeping reflects the seriousness by which they see any errors. And then, of course, let's not forget there's also employers who have, the larger employers particularly, have decided actually, with the benefit of hindsight, their business wasn't as unduly affected by COVID as they thought it would be. So actually they've repaid the amounts. So there's almost a question there whether or not morally employers, businesses, certain businesses who haven't been unduly affected by COVID, their business, actually might have blossomed during that period of time, and there may be many good reasons for that. They may actually consider repaying those amounts. Not that there's any reason why they should do, but nevertheless, that's an area that is being considered by certain businesses. And I know I've talked for far too long, so I'll stop there, Nick.
I enjoy listening to it, Samantha. You're so knowledgeable. It's all good. But we're going to come to John Keeble for returning to the workplace, the implications, double jab for a job. Over to you, John.
Yes, catchy title, and thanks for that hot potato, Nick. But I suppose just to set some sort of context to vaccination, there is some mandatory vaccination. So, for example, for workers in registered care homes, from 11th of November, they will have to be vaccinated. And there's a consultation which is going to be launched as to whether to extend that to workers in the health and social care sectors. But outside that, there is no legislative power which the UK government has for across the board vaccinations. So if they were going to introduce it, it would require primary legislation to do so. So the approach at the moment really is one of encouragement. And if employers do want people to be vaccinated, that would be the approach that I would probably take rather than mandating it. And that's for a number of reasons. Firstly, there are some individuals for whom vaccination might not be suitable. For example, those who are immunosuppressed, those with long COVID, are sometimes advised against having the vaccine so they can track the underlying conditions, etc. But if you are going to require employees to be vaccinated, then I would tread reasonably carefully, because in the earlier part of this year, the view of the Equality and Human Rights Commission was that a blanket mandatory vaccination policy was likely to be unlawful and potentially discriminatory. So it is something that you should think carefully about before you decide to go down the route of mandatory vaccination for employees. And I think some of the risks that there are in it relate to discrimination. So, for example, from a sex discrimination point of view, there are some women who may wish to delay vaccination because they're trying to conceive, and there hasn't been testing of the vaccine as against pregnant women. And another way of discrimination would be in terms of philosophical belief, which is a protected characteristic. And so certain employees, for example, may reject the vaccine because embryonic tissue was used to test or develop the vaccine. So there are risks on that front. And of course, requiring an employee to be vaccinated without their consent could be seen as a fundamental breach of their employment contract, which means they could resign and claim constructive dismissal. So I think I would tread carefully on that. I think similar considerations also apply if what you're making is an offer of employment which is conditional on proof of vaccination. And that also raises data protection issues, which need to be carefully addressed about retaining, unretaining this type of information. And of course, if you go down that route, there may be delays in the recruitment process, and you may not get a suitable pool of candidates, particularly in the current job market, which, as you've identified, Nick, is pretty hot.
It is
at the moment. So I think I would generally tread fairly carefully if you're going to go down the route of mandatory vaccination, and you really should take some specific legal advice on it, because it's an area where it's clearly fraught with some degree of risk, both for current employees, those you're making job offers to, and also if you are considering making it a condition in any job advert. So go slowly and carefully would be my advice.
I'm not sure this subject matter will be going away. It's hot in the press for the Premier League, isn't it, with all the Champions League travel and the Brazil-Argentina game. So a lot of conversations there. It's really going to make it mandatory for Premier League players. So obviously legally at the minute they can't, right? But let's see how that unfolds. I'm going to keep it with you, John, for the moment as well, because while we're talking about the end of CGRS, the coronavirus right to work checks, the end date for the temporary adjusted checks has been deferred to the 5th of April 2022, as I understand it. Wonder if you could tell us a bit more about that.
Well, I don't have much more to say on that. I understand it's been extended, and I think that relates to the way in which those checks can be carried out in terms of it not being face to face. I think that's the fundamental change.
Fabulous. Well, let's take it to the next slide then. Planning for 2022-2023 HMRC. How will it affect businesses? I'm going left to right. I'm going to start this one with you, Simon, if I may.
Okay, well, the other big announcement for National Payroll Week, because we'll be in the minds of Rishi Sunak, was the date of the budget. So as opposed to this last year, where the budget was sort of cancelled or delayed and we had it in March for an April delivery, the budget has been announced as the 27th of October. So hopefully we'll have a little bit more planning. I don't know if that affects payroll professionals as much as the software developer side, because it just means we now have 3 months to squeeze things in instead of 3 days, or negative 3 days as it felt this year. But it potentially puts us in a position of knowing a little bit more about what's happening, which has been absent for about 3 years. So this is the first time we'll be looking like we might be getting back to some form of normality. So we know about some things that will start affecting business, and there's an element of whether you plan to take advantage. We talked about some of this before. So health and social care levy is putting on a bit of a rise, 15% national insurance over for employers. Do you want to consider veterans, because there's the new veterans national insurance holiday, which actually came in this year, but the HMRC couldn't get ready in time for their system, so you have to do a retrospective claim, but will form part of payroll next year. And also the implications for Freeport, although I don't think that will affect many employers unless you've got a worker, I think I'm saying this from memory, if you've got workers that spend at least 60% of their work time in a Freeport area undertaking work for you, and then it would only apply to those. But there's meant to be an establishment of 11 new Freeports, and businesses associated with that Freeport area can again get a national insurance holiday to what potentially be a lower upper threshold value than the one we're used to for veterans, students and apprentices. So yes, quite a bit happening. Saying that, on tax, we're not expecting any change, are we? Well, apart from Scotland, maybe.
Samantha, you mentioned a little bit earlier about the Freeport and veterans NI. Anything you want to add to that?
Well, I was just refreshing my memory as to the categories, because this was announced in the software developer information back at the beginning of August, I think it was. Category V, of course, is being introduced to deal with the veterans savings. So we've got a new acronym, VUST. So that's presumably veteran upper secondary threshold. And then, of course, where there are other categories that could be impacted, then I think if I understood the guidance correctly, it would be you would need to contact HMRC to be able to manually make a manual adjustment, which was for the veterans. But with the Freeport employees, we've got 4 new categories in operation. So we've got F. So again, new acronym, FUST. It's a shame there's not a Y on the end of there. Fusty, I think, would have been a really good one. But that's Freeport upper secondary threshold, which, as Simon suggested, could be at a different rate to the other upper secondary thresholds. So category F replaces A situations. Category I replaces B, which is a real flashback. I'd be intrigued to know how many people that would affect. Category S would be the equal or the equivalent to category C, and category L would be the equivalent to category J. So of course that's where you've got deferred. Sorry, Nick, I'd just like to throw a bit of technology in there.
Simon, I do recruitment and not payroll, so I'm quite happy.
Yeah, well, it's all a bit of fizzle, isn't it, really?
It is a bit of fizzle, but I think, we like the fizzle every now and again, Simon. Yeah. So, don't rob me of my joy on that one. Can I just actually talk about the flexible SSP, which was on the other slide? I think the reason we talked about that was there was an announcement made earlier, and this might affect anyone who's been keeping sort of a close eye on the consultations that have been carried out over recent years, on the idea or the notion of introducing greater flexibility into the statutory sick pay process, because at the moment it really doesn't support phased return to work. And I think, where we were discussing this earlier, Simon made a very valid point that flexible SSP, the announcement being made that now is not the right time. How often do governments use that phrase? Now is not the right time to introduce those changes. I would say that now is the perfect time. However, government have got their hands full in other areas. And so if you've been keeping an eye out for any changes to SSP, they're not going to be happening anytime soon. Sorry, I've rambled on again, Nick. Tell me to stop.
It's all good. Well, look, we've got still lots to get through, and I know the misconceptions of holiday pay slide, when we get there, is going to be a good chattable area. So let's move on then to pay gap reporting. The gender pay gap was being reported recently by PwC that shrunk for the 3rd consecutive year. The pay gap data for 2021 reporting year showed that the mean pay gap has fallen to 12.5% from 14.3% in the first year reporting in 2017-2018. But how is the gender pay gap progressing, and the October deadline for gender reporting? Lou or Simon, would you like to kick off?
Well, yeah, I think it's just reminding us all that the deadlines that we were forgiven last year, and they haven't been forgiven this year, they were just extended. So the April 5th reporting was just changed to October. So have we got that in mind, or have we forgotten about it? That's sort of the critical message of here is, how are you doing? Because it's still judged on the same snapshot data point, and you've got to think about coronavirus job retention scheme interfering with that, etc. Gender recognition, rights to be whoever you want to be, and implications there. Maybe I'm being a bit flippant there too much, Nick, but there's an element of it's time for HR to get their reporting in.
Yeah, I would agree. I would agree. And we've got a section here on CEO pay ratios. Who would like to take some commentary here?
Well,
I think John was going to lead on this one, wasn't he?
Yeah, well, I can chip in on this. I mean, I think this has been in for a while, and I think it applies employers who have more than 250 employees, and there's a requirement to report effectively of the remuneration to the CEO, and then as against certain quartiles of employees at the 25th, 50th and 75th percentage in terms of pay, and that then generates a ratio. What it applies to, it's not all companies, it's UK registered quoted, registered traded and registered unquoted traded companies. And what it doesn't apply is to AIM companies. But same as Simon, in terms of the way in which these things are now measured and assessed. Of course, Simon's right, there have been a whole host of changes during the COVID scenario that may affect things. We've got furloughed employees, deferred bonuses that have been put off for this year, changes to the size of LTIPs and the grant of those, adjusted performance measures. All of these things are going to have a reasonably significant effect, I think, on what the differential is going to be for the CEO pay ratio reporting on that.
Right, and I know we've touched upon ethnicity reporting briefly in previous PQTs, but Simon or John, would you like to talk about the ethnicity reporting proposal?
Well, yeah, I can pick that up. It's something which is a slow burn on this, because the consultation, I think, was launched in 2018 and it closed in January 2019. And as far as I'm aware, the government hasn't formally responded to that consultation, although the BBC did get some access to information. And I think the end result of the consultation from those who responded to it was over 70% of those who responded thought that it was a good idea for employers at the 250 employee mark and above. Where there wasn't unanimity, I think, in the response to the consultation is how you are going to cut it when looking at ethnicity. And there were mixed views. Some were of the view that the split should be, on the one hand, just between white, and on the other hand, be AME, and others had a different view. And there are going to be some interesting questions about what's going to be cut if this comes in. Because one of the statistics, if you look at the way that these things are currently reported, because around 20+% of companies report this information anyway. For example, employees who are Chinese on average earn 30% more than those who are Pakistani. And that's information that, depending on how you define ethnicity, may be captured or may be lost. Because if you just defined ethnicity as Asian, then people would be in one group. So there's some interesting questions for how this is going to actually operate in practice, depending on how ethnicity is defined within any pay reporting proposals. But at the moment, this is somewhat on the back burner. Like everything else, it wasn't covered off in the Queen's speech, the various Taylor report provisions, etc. They just didn't appear. So when this will see the light of day, I think is somewhat up in the air.
Fantastic. So we'll watch this space. So listen, we're going to go to what I know is going to be a really informative discussion, which is all about the misconceptions of holiday pay. We're also going to go to our final poll of the day, which is: have you made changes to your holiday entitlement and or pay processes over the last 12 to 24 months? Maybe that's a yes, to bring up to date with case law outcomes. No, we're confident that we're already fully compliant. Yes, more employee flexibility to take contracted elements, or yes, recent guidance updates suggested we needed to. So while we're waiting for those results to come in, there have been some, I guess we're going to update you all really on the categorization of workers, and then we're going to get into the discussion about entitlement and how this is different to holiday pay. But let's start with the categorization piece. I'll come to you for this, Samantha, if I can. Talk to us a little bit about the misconceptions of holiday pay in relation to the categorization of workers.
Well, yes, I think that you've put it in a nutshell there. The term is workers as opposed to employees. So all workers are entitled to holiday pay or have entitlement to holiday leave. And that would include employees, because all employees are workers, but not all workers are employees. Agency workers, 0 hours workers, anyone really. And I think John will probably know more about this than me, but I think there have been some recent cases on the gig economy that have settled the fact that these are workers and therefore entitled to holiday leave, even though they may be self-employed for tax purposes. And John might be able to add some more there. And I think that, you know, this can be a common misconception or a common area where problems can arise. I think the reason we like to talk about holiday pay is because of the potential for the single enforcement body that is being introduced to take on state enforcement of holiday pay for vulnerable workers. I don't think there's any dates that are imminent, but that's why it makes for a very interesting subject for us to talk about.
Fabulous. We'll come back to that. Let's have a look at these poll results then. Lou, I'm going to ask for your commentary again, if we may. What are the results of the poll? A nice 60% in there.
Yeah, so 60% are saying that they're confident that they're fully compliant. So to me, that's a great way for any business to be. It's always good to be cautious, obviously, and to make sure that there haven't been any sneaky updates or things that haven't been considered under case law. But again, that all depends on whether a business wants to review it at that stage or wait and see what the government are going to introduce. When I look at 60% say yes, recent guidance updates suggested we needed to. That shows that people are actively reviewing what they have in place.
Excellent. Fantastic. Now, of course, 60% is great. There's still 40% there potentially that may need some more guidance. And we know that there is a lot of misconceptions around entitlement, which is different to holiday pay. So if we can jump back to the slide step, that'd be great. And Simon, tell us a little bit about why there are misconceptions between the two.
Yeah, sure, Nick. And you know me, I like to rattle the stick inside the wasp's nest at times. There's an element of, on the 60%, there may be an element of, are you sure? Because increasingly I'm not sure that actually, so people may think they're compliant with the law, but do they actually understand the regulation? So there are two areas that people get wrong, and you often see it. We see it all the time in social media. Employment law and payroll is, of course, 0 hours workers aren't entitled to holiday. They're entitled to 5.6 paid weeks. And there's an element of almost all category of worker is entitled to 5.6 weeks holiday, and it's prorated on a basis. And then, of course, what does that mean, and where do bank holidays fall? So the types of areas where there's misconception is understanding what bank holidays are. I mean, recent questions I've seen is, well, we pay the 20 days. And it says in the contract plus bank holidays, but bank holidays don't have to be paid, so we don't pay it. And there's an element of, if the contract says 20 days plus bank holidays, it means that you do pay it. So not paying it means you're in breach of your contract already. But you can have 20 days plus bank holidays paid. And it's a question of, that means you have to pay it for everyone then, doesn't it? Even if they don't normally work a Monday. So be very careful with what you're saying in your contracts of employment. The other is an aspect of everybody does accrual. Within the law, accrual only applies to the first year of employment. It doesn't apply any other the year. So you may be wanting to control entitlement usage so that people don't get too far ahead, but they don't actually accrue apart from the first year under the law. So there's an understanding of what the regulations are, and it falls into two parts. One is entitlement and the other is on payment. So entitlement generally is 5.6 weeks paid weeks entitlement. What is a week? The law's a bit loose on that. All they're saying is, but it has to be paid. The other aspect then is what holiday pay. So what is holiday pay for a week's leave? And a holiday pay for a week's leave is the average of the prior 52 weeks pay, excluding any zero pay weeks or affected weeks. So they'd say any non-normal weeks. So you could say actually weeks on furlough should not be included in that averaging. So it's look at when people were paid normally, even if they're on variable hours, and only count weeks where they had pay. And you go back 104 weeks maximum to find those 52 weeks. And if you have less than 52 weeks, you average it over the number of weeks you found with normal pay. And that's your average weekly earnings. Multiply that by the entitlement they're using, you've got your holiday pay. Do most of the employers do that in the UK? I'm not sure they do. And that's why I tend to say with the 60%, it might be actually worthwhile revisiting what the law actually says. The other types of questions I've seen that are raised are about, well, we do our holiday in hours, and they started on this date and they ended mid-year, and we calculate that because that was 79 days out of 365 times this times 7.5 hours. That comes up with this entitlement. And it's an element of what does the law require you to do on accrual. And you'll find that, say it falls under Working Time Directive, Regulation 15A 2A, it states, leave is deemed to accrue over the course of the worker's first year of employment at the rate of 1/12. So if you work a day, you get a month of 5.6 weeks. If you work a month and a day, you get 2 months of 5.6 weeks. And that only applies to the first year. And so it's just understanding what they are. And then they'll say, but we do it in hours. So what does that mean? And then it goes under Regulation 15A, brackets 3. It states where the amount of leave that has accrued in a particular case includes a fraction of a day other than a half day, the fraction shall be treated as a half day if it is less than a half day, and a whole day if it is more than a half day. So what does that mean for hours? It means you have to work out what the daily entitlement is first and then multiply it by the number of hours in that day. You can't just divide hours by the fraction. It doesn't work. And those are why there are lots of misconceptions and people going, oh, and they may say, well, the way we do it means they get more. Sometimes it might. Sometimes it might mean they get less. And you can pay more than the statutory minimum, but what you're not meant to do is pay less. But at the moment, and I guess it's an element of propensity to challenge, the only means of challenge for an employee at the moment is to take an employer to an employment tribunal. In future, when the single enforcer comes in, you just make a complaint to the enforcer. And
We've had two
I think
questions
that's
come in
different.
here, Simon. So
Sure.
maybe these are outside of the 60%. One is, how is the calculation affected by commissions and bonuses, particularly if a large commission or bonus comes in, perhaps just before, they take their holiday, so it just falls into that 52 weeks. How does that impact on the calculation?
It certainly does. So commission is included, and bonus if it's associated with work. So if it's for the course of duties, then it's included, but bonus that isn't associated with for the performance of duties isn't. So if it was, for example, a Christmas bonus that's given to everybody, you may find that it doesn't have to be included. But if it's a bonus because your department or you've done something special because of the way you've worked, then it would potentially fall within holiday pay averaging requirements.
Fantastic. And the other question I've got here is, I have self-employed people working for us. CEST assessments have been completed for all of these people and they all come out of self-employed. Do I have to pay holiday pay? I didn't think so, but now I doubt myself.
the element is whether they're considered a worker, and truly self-employed people you wouldn't have to pay holiday for. John may be able to comment there a little bit more, but there's a lot of confusion about what self-employment means, and so contractors generally are not self-employed. They're employees of their own business. They're not self-employed at all. So IR35 doesn't apply to self-employed people. It can't, but it does apply to personal service companies who in effect work for themselves. There's a difference between working for your own company that you own as a director and working as a sole trader. Any thoughts there, John?
No, I'd agree with that. Just a couple of comments on misconceptions. I think probably the biggest one that we find is that employers assume that you accrue holiday by working, and you don't. You have holiday as an entitlement because you are employed, and that can cause a whole host of issues with people assessing, particularly if you have people working somewhat irregular patterns or on a casual basis or the such like, and it can cause fairly significant issues in all of that. The other area where we see employers getting it fairly wrong fairly often relates to the holiday pay and what goes in it. And you've covered off, Simon, the commission, which obviously has to be included. And there's the overtime issue as well, which is a little bit vexed, because overtime generally is included, but it should be regular overtime. And quite what regular means is anyone's guess, because you can have something which isn't particularly frequent, but would be regular. So there are all sorts of tricky issues, and there are still a significant cohort of employers who just don't pay for any of these matters in terms of holiday pay, of the overtime, the commission, productivity bonuses, all these elements which are intrinsically linked to the performance of tasks. And some of it is a question of them not being aware. Some of it is a question of they are aware, but given that the holiday pay claim is limited going backwards for 2 years, if you don't pay for 5 years, then on one basis, you're doing okay. But I suspect there's going to be a whole host of employers who are busy revisiting what they're going to be doing with the spectre of single enforcement coming down the track.
Yeah, nicely highlighted. Well, there's another question that's just come in as well. So it's great to see such interaction here. So do keep them coming if there's something, a burning question you want to go off your chest. We've still got a few minutes left to go before we close this off. So should leavers receiving a pylon receive an element of holiday pay for the notice we are paying out?
No.
Okay,
So the holiday payment is to the termination date. The pylon doesn't extend the termination date because you're paying it instead of giving them working or giving them notice. Is that? I think that's where we're coming from, isn't it, John?
Yes, clearly if someone works out their notice, they'll still be employed, still be accruing holiday. But the essence of a payment in lieu of notice is that your employment will terminate at that point, and therefore there is no entitlement to holiday pay on the pylon because it's not a period of work.
Yes.
And any implications mentioned here for national minimum wage?
Yeah, I think the reason that's there is one of the most frequent questions we're asked on NMW enforcement is the inclusion of holiday pay. And the reality is when HMRC come in and do an audit, they will totally ignore holiday pay because it's got nothing to do with working. It's to do with not working. And so be careful. So if you've got a period that has a period of pay and holiday pay, and you've operated a salary sacrifice, they'll ignore the holiday pay and they'll look at the pay and say for the hours worked, is that paid, which seems an odd, and it's one I've raised at the National Minimum Wage Stakeholder Group, which I'm part of, that's operated by BAYS and HMRC. There's a group of specialists that attend that. They run it about twice a year with questions, because it seems innate that if you were on holiday for the whole period and you had a salary sacrifice of the holiday pay, because your holiday pay was what you would normally earn, that would be fine, because national minimum wage would not be tested in that period because you haven't worked. But if you had half and half, you've earned exactly the same amount of money as if you'd worked. The salary sacrifice is going to be judged against half the money and not all the money, because half of it's holiday. Does that kind of make sense? Hopefully, I think I might be confusing people. It is confusing, and that's the challenge with minimum wage, is it's very confusing, and it's not inclusive. So I get questions on what about with an SMP? Does national minimum wage apply? And the answer is no, because they're not working. What about if they're on furlough? Does it apply? And it should have risen because of the raises in national minimum wage, and it's sort of, well, they're not working, are they? So it doesn't apply. Does that help a little bit? But that's the implication of national minimum wage, is that holiday pay doesn't count towards national minimum wage rates. And if you're operating salary sacrifice and the deductions for the benefit of the employer, they won't consider it off the holiday pay, they'll consider it off the normal pay.
I'm conscious of time, so I'm going to come to one more question. I don't know if they're in the 60% or not, and I won't mention who the question comes from, but we talked about going back 2 years rather than 5 in your example, John. What are the implications if employers do not include bonus and commission payments to holiday pay calculations?
Well, if you don't include it, there can be a claim which is brought by an employee in respect of those amounts. Generally, in an employment tribunal, all claims would need to be brought within 3 months of the termination of employment, although that's slightly extended because you've got an ACAS process that you have to go through first before you can submit your claim. And if a claim is put in, then a tribunal will determine it. But to say the backstop is that they will only go back and look at the previous 2-year period in assessing the value of the holiday pay claim.
Excellent. Well, we've got.
Sorry, it's an element of understanding what the single enforcer will do, and I guess we don't necessarily know. But as John's saying, if I feel I'm underpaid, I can take my employer to an employment tribunal. If my friend is underpaid, my case has got nothing to do with them. The court won't look at him, even though he may be being underpaid as well. But when the single enforcer comes in, they may actually find that I've been paid okay, but my friends, they may find, hasn't. Will they enforce the payment? And that's how it operates with national minimum wage. So people report a problem with national minimum wage, they don't just look at that one case, they look at everyone.
Yeah, well, I'm with you, Simon. I'm anticipating that it's largely going to operate on the same basis and in the same way.
Hopefully these webinars will help everyone prepare accordingly, right? That's what it's here for. And thank you everyone for putting all your questions in there. If you don't get through to them, remember we will try and answer them separately too. We're going to jump to hot topics. We've got a couple of minutes just to run through some of these. I'm going to run through the first one. The Republic of Ireland has a new sick leave pay regulations. It currently does not have a mandatory sick pay scheme, and the decision as to whether employees receive pay during periods of sick leave is a matter for each individual employer. So this is very much reliant just to the Republic of Ireland employees if you have a Republic of Ireland payroll, because this is about to change. Soon employers will be required to provide statutory sick pay to employees under proposed draft legislation called the Sick Bill Leave 2021, or the 2021 bill. So look out for more information regarding that, particularly if you have a Republic of Ireland payroll. We've kind of covered R35 in a lot of detail over the previous ones. Any additional sound bites, John, to mention here?
Well, just very in 30 seconds, I'd say just in terms of a couple of trends that we're seeing, we are seeing a significant number of employers who are moving away from contractors because they just don't want to engage with an IR35 assessment at all. And for those which are carrying out assessments, if the assessment is inside IR35, they're shunting them off to umbrella companies or agencies rather than going through a direct engagement.
We've got an umbrellas point here on hot topics. Over to you, Simon, to talk about this.
Okay.
20 seconds.
Yes. Yeah, it's just making sure umbrellas, they also have what they call a muck. So there's mucky umbrellas as well. There's lots that seem to be like phoenixes, so you end up changing agency every couple of weeks. It's usually a scam to avoid tax and NI, which can end up affecting the worker. But be careful, because generally, if you're working for an umbrella, you're paying the employer's national insurance and your own holiday because you work. Well, they're taking that off on their fees so they can pay it for you.
I think here is just do your due diligence. There are some dastardly umbrellas out there, or some very good ones, but do your due diligence. And I just want to take this opportunity to thank the panel, Simon, Lou, John, and Samantha for joining us. Thank you to all of you for joining us as well, of course, on Payroll Question Time. Huge thank you from me. Thank you for everybody's wisdom on the panel, and those questions we'll try and get to. If you haven't answered them today, we'll follow those up with the slides as well. And all of for myself and all the panel, we look forward to welcoming you all again to the next Payroll Question Time in October. Sign up details are on your screen right now, so look out for that, and we'll welcome you all back very, very soon. Thank you, everybody.
Bye, everyone.
Bye.
Bye.